G'day everyone, welcome back to Pete's Investing. Today is February 23, 2023. This is the Bitcoin price update. As you can see since our last update, we did draw this key resistance line up here and also this support line, and it's been consolidating in this area for some days now. It has actually bounced off that resistance line quite nicely, so just be mindful. On the daily, the CCI is still in a decline on the moving average, and the CCI itself is turning down towards that moving average. On the 4-hour chart, it's still the CCI is been in a bullish momentum for some time, but it's also retracing down towards its moving average. And on the hourly, it's been lying flat for some days, but it's finally broken through that moving average as well. Now there is a key, again, as I said, that is a key resistance area, and we may see a significant retrace back down towards this support area at least. So just be mindful of that. And we may even see it break below that support area in the coming days or possibly weeks, depending on how strong the retrace is. But at the moment, I would suggest avoid going long and probably just wait and see how it performs. You'll notice also the stochastic on the daily, it's bouncing off from the oversold area, and it's been down there for some time. But on the 4-hour chart, and on the hourly, it's gone through the overbought territory and starting to turn down, and likewise on the hourly chart, it's reached the overbought and starting to curve down as well. But again, our CCI is our main indicator, and we're saying just hold off positions until we know for sure how this consolidates, if it's going to break up through this resistance. But signs are it may actually break to the downside in the coming days, or wait and see how it performs. And to understand how to properly trade using the average down process, reference the playlist at the end of the video or some links in the description below. Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. The reason for that is blue chip stocks have generally got a good history and a good track record, and you want to avoid going speculative because you're not sure where that stock, especially if it hasn't got any history, you want to avoid making just guesses or gambling on potential trades. Buy stocks which pay dividends. The reason for that is if the price goes against you and you're not closing out according to gaining a profit in the short term, at least you're getting some level of income via dividends if the stock price goes against you. Don't short positions, go long only. So again, similar to the blue chip environment, if you're going to go short, you're basically speculating. And if you are going short and if you have to pay dividends, the dividends will be paid to those traders that are going long. So that'll be just an extra cost in your trade. And don't trade on news. Price is already factored in the share price. If all the insiders have generally benefited from any inside knowledge of the news, and so by the time it hits the websites or the papers, you're getting late on the bus, so you're going to be missing out on any potential gains. Thanks for watching. Don't forget to click the subscribe and the like button and click the notification bell to get all the updates to the channel. If you want to support the channel, subscribe to the Patreon page. The link is in the description below. Happy investing, and speak to you in the next video.